Hey guys, what's going on? Welcome into the video. So we got a lot to get to in this one. So first off, we're going to take a look at how to trade a false breakdown setup. This is what has triggered the massive rallies we saw in both these past 2 weeks for those 3% plus moves off of lows. We'll be going through that and then going over a few different scenarios that we could see for the broad market in the week and weeks ahead and how to trade that, some key levels to watch with that as well. Then we'll be going over a few individual stock setups that are primed for big moves in the week and weeks ahead. Let's go ahead and get on into it. So first off, taking a look at the S&P futures chart to show what played out this past week. On Monday and Tuesday, we had rally days, which topped near 37.75 and defined key resistance at that level. We then chopped and consolidated through Thursday, which showed that 36.75 to 36.80 was major support. At the end of the day on Thursday, we started to break that key support, which means that sellers were in control unless 36.80 was reclaimed, and that is exactly what played out on Friday and triggered a false breakdown reversal setup. So setups like this are the best for tradable rallies and bear markets like we are currently in. Once price breaks a major support level, there's always short sellers that enter on the breakdown, but if that major support is reclaimed above, all of those shorts are forced to buy back and cover their positions, and this is the type of setup that results in the strongest rallies in bear markets. We had the exact same setup last Friday. The 35.80 zone was core support all week. It broke down after the CPI data release, and once it reclaimed, it started that major false breakdown reversal and short squeeze rally. So now let's outline some scenarios that we can see in this coming week and beyond. So futures are currently testing that key 37.75 level. So my personal current base case is that we will see at least 38.50 on this rally, which is a major resistance. And we could get there a couple different ways. So first, if we pop above 37.75 early next week, we could see a move towards 3800 to 3820, but because after Friday's move, we are pretty overbought where we currently are, we need a sizable pullback move after that. So I would expect a retest of at least that 37.75 as support. And as long as that is able to hold, we can see that 38.50 level next. So something else we could see is another rejection at this 37.75 key resistance, a pullback to backtest the white trend line along with 37.20 support. And as long as that level does hold for a higher low, we could see the breakout play out after that. An opposing bearish scenario to these would be a breakout to around 38.20, a potential double top there. And if 37.75 fails to hold on a pullback, the S&P could break down from this rising channel below 37.20 and then send the market lower after that. And finally, if we look a little broader and zoom out a bit, we can see this rally get upwards towards 3900, which is a major inflection point with these trend lines. On a break above, we could see this rally get up towards 4000, or if it fails at that point, that would be potential top of the rally and then send the market lower after that. Now, all these scenarios being said, I personally think that we will see more short-term upside, but this will ultimately end up being a bear market rally, and we will see new lows before this is all said and done. I would love to be wrong on that, by the way, but as we've talked about, this market just has not seen the capitulation selling that has signaled the bottom of all historical bear markets, which is why I do not think that we have seen that bottom yet. Now, taking a quick look at the SPY, this lines up with futures, of course, just a different visual and some different levels. We are potentially set up in an inverse head and shoulders pattern, which could break out on a break and hold above 375, and this also lines up with that 37.75 level on the futures chart. Zooming into the 15-minute time frame, I have the strongest levels mapped out as those white lines. Above 375, we can see 377.5 next. And ultimately, I think we can see 382 on this rally with 388.5 as that higher upside target. And this is as long as major earnings this week are not disastrous, which of course is a scenario that we always need to consider. So getting into the earnings, the most important earnings week of the season are this week with Microsoft, Google, and Visa reporting on Tuesday, Meta reporting on Wednesday, and Apple and Amazon reporting on Thursday. So these are some of the biggest weightings in all of the major indexes, so we could see some wild moves this coming week depending on how those earnings go. The single biggest risk to this earnings season is Apple, in my opinion. I personally think a lot of risk and negative earnings are priced in to companies such as Meta, Google, Amazon, and even Microsoft, but Apple is down less than 20% from highs, and there's a lot of risk heading into earnings trading at this expensive, above a 24 PE multiple with projected only around 5% growth. This week there was a headline that Apple is lowering their iPhone 14 production. Now this is the same headline that came out a couple weeks ago as well. Something to think about here though is news does not come out on accident ever. Somebody is always behind wanting it to come out. The timing right before the earnings is also odd. Is Apple putting these headlines out because they want to lower earnings expectations for this quarter and next? That is certainly a possibility. If we were to map out a bear case for this stock, we could say that it's currently building out the right shoulder of this head and shoulders pattern, and if earnings are bad along with another rejection of the 150 to 152 resistance zone, it could get ugly for Apple stock, and we could see a big time breakdown in the future. Apple is also the highest weighting on the major indexes, so if Apple goes, so does the market. Now this is just a highly speculative scenario to think about, but something like this could send the market for the next leg down if it was to play out. Things could definitely get interesting this week depending on how earnings will go in the coming week. We likely have a lot of volatility ahead, so get ready. Now taking a look at a few individual setups and trade ideas for the week ahead. First up we have AMD stock, which has been consolidating in the same range between 56 and 60 for the past 10 trading days. After a huge consolidation like this, a large move will always come next. Watch this as a long trade on a break above 60 with targets above at 62.3, 64.12, and then 66, or a short trade with targets below at 54.57, 52, and then 50 as those first three targets on the downside. After some massive consolidation like this, whichever way it breaks, we will likely see a 10% plus move in whichever direction the decision is made in. The next setup to watch is with Clearfield, ticker symbol CLFD. This stock went on a 150% run from mid-June to mid-August. Since then has been cooling off and basing for the past 2 months. Watch this on a break above 108 to break out of this range, potentially start the next leg higher. On any breakout setup like this, I would be looking to enter on a break above the range, which is 108 in this case, and then place a very tight stop below, say at 105 to 106-ish, so we're only risking about 2% with potential for a 20% plus target gain. Another name that has been one of the strongest in the market recently is Aehr Test Systems, ticker symbol AEHR. The company had an earnings beat this past week, a powerful gap up, and is now breaking out. Watch this to hold above 18.5 support, and if so, this can then see upside towards 22, 24.5, and then previous highs above there. This move has also been backed by heavy volume, so this stock is looking very strong as of right now. Of course, in this market, things can change quickly, but setups like this are A1 for rallies. Even if it's just a bear market rally, it should be leaders in that time period. And the last setup we're going to take a look at is with Celsius, ticker symbol CELH. This stock is in a long-term cup and handle pattern and is potentially building out the handle currently, while also being a falling wedge that is now getting very tight. Watch this for a break above 89 to break out of this wedge pattern to test the 92.5 to 95 breakout zone, and if it is able to break above that range, we can see the stock start the next leg higher above, as it has been a leader for quite some time since we bottomed back in June. This one does look ready for a pop as long as the market is able to continue this current rally that we're in. So that is everything that I'm watching this week. A couple of scenarios for the broad market to keep in mind, a big earnings week ahead, and a few individual stock setups that are at the top of my watch list for this week and weeks ahead. Hope you all enjoyed and provided some value to you. If so, make sure to hit that like button and subscribe button. It helps me out a lot, and I would greatly appreciate that. For anybody interested in joining the private Discord chat, that is the first link down in the description for all my personal trade alerts. And good luck trading this week. I will catch you all next time. Peace out.